We're continuing our conversations here at Davos 2022. I'm Shereen, Bhan, and joining me now is Nikesh Arora. Nikesh, always a pleasure. Good to see you again, and this time in Davos. What's the mood like?
Well, very nice to see you as well, Shereen. The mood is, I think, a bit somber. I think there clearly is the unfortunate event going on not too far from here with the invasion of Ukraine by Russia. There's a lot of conversation around that, and a lot of conversation around what that means for the geopolitical environment, what it means for where people are aligning. The good news is that it's really shown the solidarity of democracy. The West is getting together, and democratic nations are sitting down and saying, this is not right. At the same time, there's a worry as to how long this will last and where things end up. I think on top of that, given we've seen all the supply chain crisis and the inflation issues, there's a question about where is the world economy going and where is the U.S. economy going.
Well, I'll talk to you about the economy in just a second, but you talked about Russia and Ukraine, and the expectation is that this could also lead not just to a war on the ground, but a cyber war as well. Have you started to see any indications of that yet? Because we haven't heard of any sort of blowout events so far.
Yeah, well, not to use the term blowout in the context of war, but look, on the cyber front, we've seen signs that people are paying attention to all the activity that companies are doing in terms of operating Russia, operating Ukraine. We've seen signs where Ukraine has been a target, obviously, of a lot of cyber activity, and some of that has spilled over into neighboring countries. But I personally think they're still holding back their firepower in the cyber context because they're right now engaged in a very, from a Ukrainian perspective, they've held out very well, and I think that's the right thing. But I don't think they have actually unleashed their cyber guns towards the West in a way where they could cause some harm. But the signs are there. Look, all the hacking activity you saw in the past, whether it was SolarWinds, which was driven by Russia, or whether it was a bunch of the ransomware attacks, which are primarily centered around a lot of Russian activity, they have the capability of shutting things down. And what if next time they don't ask for ransom, they just shut it down?
So if you're saying that they haven't unleashed their full power just yet and it is more restrained at this point in time, how prepared are corporations, governments at this point in time? Are you getting called? What's the situation like in terms of preparedness and being ready for an eventuality like this?
Well, look, I think there has been awareness over the last 2 or 3 years. Everybody has been strengthening their defenses. At the same time, there's a lot of advisories being issued by various governments, be it the West, be it the United States. So people are making sure and they're ring fencing critical infrastructure. So I think there is awareness that we need to make sure that we protect ourselves. There is awareness to be ready in case something happens. How can we be resilient and get back up again? But when it happens, we're still going to have to see what happens and what they go after and how we spring back from it as quickly as we can.
You said that there is and there has been awareness over the last few years in preparing for an eventuality like this, and that's been good for you. You've had a good quarter, your best in the history.
In 5 years, yes.
In 5 years,
yeah.
so that's a good number for you. But what does the outlook look like at this point?
Well, look, I think there's a conversation today about cybersecurity at Davos, and the general feeling is that there's a lot of legacy infrastructure in the world, which companies have deployed. The only way to fix security in the long term is to replace that legacy infrastructure with the new infrastructure where security is built in. Otherwise, we're trying to bolt on security afterwards, which is not a good strategy. For us, we've done well because we've actually been transforming the business over the last 4 years, where we've actually gotten into a bunch of new areas where the world is going. So that's helped, and of course, better cybersecurity awareness helps as well.
Let me shift away from cybersecurity and talk to you about what's happening in the tech world and in the startup world. It's a meltdown as far as tech stocks are concerned. What do you make of that? Because on one hand, everyone's saying that, there is an explosion of demand. People are looking at digital transformation, business transformation, using tech. So there doesn't seem to be a demand issue on the tech side, but clearly there's an issue as far as valuations are concerned.
Look, I think we have to separate activity from valuations. I think tech is here, transformations are here. The pandemic accelerated everything. Pandemic made, I think I heard somebody say, 1 year's worth of progress was made in a month. So the pandemic definitely put 800 more million people online. So we saw acceleration of technology, and that's kind of filtered through the entire tech landscape, be it traditional tech companies or large software companies or smaller companies. I think coupled with that, the amount of innovation that's going on around the world, that drove a lot of people towards the startup economy. Now remember, the US pumped $5 trillion in the midst of the pandemic. Money was free. When interest rates are zero, your risk appetite goes up. You're willing to put money in anything which is out there. And I think that normalizations happen, which is always healthy because you want normalization, you want people to build healthy businesses. And I think some people have sort of had a rude awakening if they were not aware that you actually have to build a robust business. But if you look around, some of the biggest tech companies were born the last time we went through a crisis. So I'm hoping that's going to happen this time too. But yes, it has been a bit of a bruised vanity for some tech companies for sure.
That's an understatement, if I could call it that. But do you think that this is going to get worse before we start to see normalization?
I've talked to some people way smarter than me, and they said, we've seen the PE compression, which is when multiples come down, which we've all witnessed. The market's taken stocks down 40 or 50%. I think the next thing, what she said, which is beginning to happen, is the E compression. Earnings are going to falter, and we saw that today. The Nasdaq's having a meltdown because somebody pre-announced that they may not make their number, which is kind of contagion throughout the market. So I think we're going to see a bunch of E-compression. Earnings are going to come down, and you'll have to separate the better companies from the not so good companies. And I think eventually, unfortunately, what these pundits told me is that there's going to be capitulation. People are going to say, I don't want to own equities for now. And that's when I think the bottom comes, and that's when you go back up from there. So I think there's a little more pain ahead of us.
Speaking of contagion and the rout that we're seeing in the crypto markets, yes. I mean, halving of the kind of valuations that we have seen there. Are you a believer? And if you're not, why not? If you are, why?
I think maybe I'm getting too old for this stuff because I'm still trying to wrap my head around crypto and wrap my head around the metaverse. I think interesting concepts. I think valuations there may have even run further than some of these risk-free assets. So time will tell.
Okay.
I know blockchain has utility, blockchain has something that is required, but not sure I buy the crypto valuations.
Startups, and yes, we are seeing a lot of the valuations correct. The expectation was that in India we would see more IPOs. That looks like is going to take a pause, and we'll probably revisit that story in a couple of months. We're seeing layoffs start to happen as well. You've gone through these cycles previously as well. Is there anything different this time around, and what should founders be mindful of, and what should investors be mindful of as well?
Like the same valuation extravaganza we saw in the Western world happened in India as well, right? The investors from around the world flocked to India looking for innovation, and to India's credit, our founders and startup folks actually grabbed the opportunity and started really innovative ways of creating businesses for the Indian market, which is delightful because this is kind of a once-in-a-lifetime trend we've seen. Having said that, again, valuations run away, and as we know, Indian equity markets are even more sensitive to cash flow and profitability. Indian equity markets don't believe that growth will happen in the future, I should pay for it now. So I think that market has rationalized, and coupled with the rationalization around the world, it has sort of reset valuations for some of the IPOs that happen in India. And look, the only message to founders is build a robust business, build a good business, build a business fundamentally built on cash flow, and the valuations will come. But you're not going to get a free ride in India or in the West.
Yes, clearly that's unlikely at this point. Unlikely at this point in time. But there's a lot of dry powder that people are sitting on. I mean, there continues to be an abundance of cash. So do you think this is a momentary pause?
Look, I think there are tons of great companies out there. They may have gotten ahead in valuation, but these companies are growing at 50, 100%. So in 1 year, 2 years from now, they'll be worth twice as much. So I think the valuations will return. The companies have to grow into them. And I think the cash that is on the sidelines will go towards good companies.
So as a former Google man and now at Palo Alto, you said you're tentative or on the fence as far as cryptos are concerned, and even the metaverse. So
yes.
What's the big tech trend that you're excited about or watching out for?
Look, I think there is a lot of data that is being collected in the world. I think a lot of the data is going to be used very effectively to build artificial intelligence-based recommendations, anything. I think medicine, healthcare could go leaps and bounds. We could all live a lot longer because you have data from the beginning when you were born all the way through your life and be able to analyze that stuff. There's so much data that can be used in manufacturing, in pretty much any sphere in the world. And the application of analytics to that data for the betterment of mankind, I think is going to be phenomenal.
So as you look at the world today and outside of business, what's occupying mind space?
What's occupying mind space is my 2 young kids, wake up happy, delighted to see them enjoying life. And unfortunately, travel is back. So
unfortunately, travel is back. You didn't miss it?
I was enjoying living at home, getting on Zoom, meeting customers. It's nice to go out a little bit, but now everybody's traveling. My competitors are traveling, so we've got to get back on the road. And you suddenly realize, why was I traveling 150 days a year?
So the whole hypothesis that the world is going to shift from work from office to work from home and hybrid workforce.
All that is happening. All that is happening. But travel was never part of the hybrid equation. So you still have to travel to see customers. We're all here in Davos.
That's right.
So that's going to happen.
Well, Nikesh, it's always a pleasure. Thanks very much for joining us on CNBC-TV18. But yeah, Young Turks as well. I'm going to get you to talk to us about that because you've been part of the show as well. We turned 20 in June.
Congratulations.
Thank you very much. So your message to founders?
Look, I think there are some phenomenal businesses being built in India. I've enjoyed watching it from a distance. There are some very, very smart people. And I think fundamentally the risk appetite in the youth has changed, and I think that's welcome. I think people should stick with that. I think there's some great ideas out there. People are trying to reinvent and disrupt a whole bunch of industries for the first time for the Indian market, and some of them also doing it on a global scale. So I think we have to keep that ethos. I think we have to go out and build a great business. There's tons of money out there to support great founders.
Thanks very much, Nikesh. Always a pleasure. Thanks for speaking with us here in Davos. That's Nikesh Arora. We'll take a break here and come back with a lot more on our Davos conversations.